One.
Well, the Russell rebalance is now completed, and it looks pretty similar to me to the way it was before. We'll discuss those tech stocks that got hit, the other stocks that got a rebound, and where they're going from here. Earnings season rolls along. Tim Quast at 8:35. This is pre-market prep on a Monday.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. After a 2-day losing streak, we're starting out in the green by 7 3/4 handles as we speak at 45.7250. The buck back over par, up a nickel, 100.85. Bonds getting a rebound too. We'll see what happens on Wednesday. Bonds are up over a half a point at nearly 127. Crude continues its move towards $80. 60 cents at 1967.20. Silver trying to get over 25. That's up nearly 14 cents at 24.83 and a half. And Bitcoin, despite the good news, we lose 30K. We're down $645 at 29,240. Let's bring in Triple D. Let's find out what size popcorn he got at the Barbie movie.
Ha. I know I have to go. It is on the to-do list here because my daughter wants to see the movie very badly, but I did not get there this weekend. It was a busy weekend. We're planning on maybe one night this week or maybe next weekend getting out there, but she's pumped for the Barbie movie. It did pretty good here, didn't it, Money Mitch? You in the background there?
I'll be right there. I'm sorry, just having some camera issues there, but I'm back here.
What was the Barbie? Let's talk. Do you have the numbers? How'd they do?
Of course, man. Barbie making a powerful statement in the box office with an estimated 155 million in domestic ticket sales and outbeating Oppenheimer, which was the real battle, right? Was it the big manly movie or was it the big female movie that was going to win? Well, I'll tell you one thing. Seems like we didn't get it. The guys didn't get out to the movie theaters this time because definitely Barbie killing it there.
Barbie killing it.
And one thing that I will say, though, is this movie did cost Warner Brothers $145 million.
Wow.
And then also to state on that, this doesn't include the marketing that was included for Barbie.
Big costs.
And I was talking with my wife and her friend. They went to the mall this weekend, and they said almost every single store had a Barbie section and was just pink, like a whole section, just pure pink out there. The marketing was insane.
I know.
So the amount of money that was spent for marketing, I can just imagine. I even heard that Mattel was even getting potentially sued because they were giving out Barbies in elementary schools, like as a donation.
Oh, really?
But people were like, there. This is just a sneaky little marketing scheme by Mattel.
Kids hooked on Barbie.
Yeah. They were just handing
I
out
saw some displays
Barbies.
too. I went to Walmart and they had a big Barbie display. And it was like Barbie the movie too. So even at Walmart. So you're seeing the Mattel push here. The stock of Mattel is up here this morning. I have sold out of my Barbie trade this morning. So I've been pretty much in Mattel every single night, making money because it usually seems to be up in the mornings. I'm out. Barbie trade. We had the nice run up, and I mean, the run up started early in June. It's been a good run here. I think I don't take the chances after the fact, so I'm ringing the register. The event is over. I'm out.
Just looking at it technically, and I'd like to set up on the daily. Who knows if this magical move in Barbie will continue? You got a triple top just over the 22 area. They've been defending just under 21. So let's see. Let's just look at this 2150 area. That's kind of like in the little, a little bit with the retracement with the low of the move. So I think it's a big day today. I like to see it, take out Friday's high, 2159, make a new closing high for the move. But until Barbie can get a sustained 22 bid, I don't know. I think you might see some profit takers in
It's
this.
just the
It's been a
classic
magical
buy on
run.
rumor, buy ahead of the event.
Exactly.
And then sometimes you see it's a crapshoot, but a lot of times you see the sell on news. We're early here this morning. People are talking. It's been talked about on CNBC. They're buying Martell up. Oh, it's exciting. I would not be surprised if there's a rug pull here. So that's why I'm out. WBD is a Mitch money play on this one.
Yeah.
And it hasn't participated really. It's kind of been disappointing. I've tried to play it a couple of times with limited success. It's up here again. I did have it over the weekend. I did sell it. So, I made about 1% here, but I'm out on that one too. So I'm completely out of the Barbie trade here now.
Hey,
I
Dennis,
I, I
Eric,
was
Eric slipping in here. For a trade like Mattel, that's a little bit, that's more of a speculative trade, right? You're not trying to hedge that off as with a lot of things, right? Like,
No, I
yeah,
mean,
it's a
no, you're
that
trying
trade.
to extract alpha. We talk about this, the event run up, from earnings, from like an Apple event, from, if there's a catalyst, the run up into the catalyst. We talk about that all the time, trying to extract alpha because there's a buzz, there's an excitement. You know how I like to be long stocks before they report. This is the same type of a trade, being long the Barbie movie before the Barbie movie gets released. And,
Okay.
and it worked out pretty well. The last week was somewhat disappointing. It worked better the week before, but there was still times where it seemed to be up every morning. Like it seemed like you come in and it would be up. So it was giving you outs. Even on some of these down days, it was still giving you outs. So so I was playing it from the long side, which we talked about overnight here, in and out, like because I'm still 24-hour trades, but I buy it overnight, hold it overnight every single night for like the last 7 or 8 days I've done that. And then selling it out early in the morning.
We'll talk about running up to an event. The analysts were all over Domino's Pizza going into the report. You want to hit that, or should we just finish up with the rebalance trade? I'm sorry, I
No, well,
skipped over
yeah,
that.
he's taking over here. But let's recap. So let's go back to the rebalance trade because let's recap what's happened last week. QQQ Friday's trade was very obvious that they were hitting the big seven and they were buying other stocks. So we expected this to happen earlier. It really didn't go on till Friday. Friday, well, maybe Thursday. Thursday a little bit. Microsoft started getting weak, but Friday was very evident. Microsoft was down big, Nvidia was down big. They had huge sell imbalances into the close. So you could see Nvidia closing on the low print. I actually bought Nvidia on the closing print. It gapped down another $1.50 on the closing print. If you look at it there, you won't see it on the chart because it moves so much, but it gapped down another $1. So I was able to actually buy the closing print. And then I flipped it out after hours for an immediate. I mean, I was in that trade. I got filled at 43.09. I brought it up and it was 44.75 bid. So it's literally $1.50 just from buying the closing print. I was like, thank you. I took the $1.50 and I'm gone. But the trade usually is, we knew Friday. So today is the official start of the new QQQ, but it was Friday's close, which was marking it. So the end of the trade was Friday's close. So the question now is, now that you've had this rebalance and you definitely saw some pressure in Nvidia and especially Microsoft, two of the big ones that were actually going to have huge sells on them, which we talked about last week. Does that trade reverse here now? And do you see strength in those stocks as that QQ trade is now done, the rebalance trade?
I think you look
Asking you
at,
guys.
yeah, no, I'm just looking at it like, technically, and these stocks had really nice moves, right? Before there's been just like an unbelievable run in Nvidia. So I'll be looking to see how much, you made that all-time high. I'll just throw 481. They took it down a 40-point move. Can this get, if this is Nvidia, if we're gonna keep going, it's just gonna keep rolling. It's gonna get back to this 460 area, which is the area of Friday's high, and keep on going. I mean, if not, perhaps more work to do on the downside, but that's the way I'd be looking at it. All the charts are a little bit different, but see how much of that moves. Same thing from Microsoft, makes a new all-time high. That they were leaning into that one pretty heavy 3 days in a row. See what it gets on a bounce. So that's what I'd be looking for in the big boys. And then the ones reversing, well, look at Walgreens. I mean, look at that 4-day rally. You mentioned Starbucks too. will they be able to hold even the closing
This
price?
is the opposite. So just to clarify, because it's a confusing trade for a lot of people who don't trade rebalances, is the textbook trade is usually the fade on the last day and then the reversal the next week. So you would actually be, if you're playing the classic, you'd be buying the close on the Nvidias and the Microsofts, and you actually would be shorting the close on the ones that were getting added, the ones that were getting buys into it. So if we look at those names like Costco, COST, had a very strong Friday. PepsiCo has been running. That's been running. I'm just cherry picking the big ones here. I'm looking at that sheet that
You
we
said
got from
Starbucks. You said
yeah,
Pepsi
Starbucks was another one. Cisco was strong. Texas Instruments was strong on Friday, TXN. So the classic trade is actually the reversal of that. So, I mean, if you're just ignoring technicals altogether and just doing it from how these sometimes historically work, is you actually see the trade reverse itself on the Monday. So you'd look for weakness in those other stocks. So you actually look for strength in the big 7 and weakness in the other 93.
I'm just looking for the cheese and Domino's pizza, of course. Let's go to it. As they surpass expectations in Q2 EPS of $3.08, but fall slightly short on sales at 1.2 billion. Meanwhile, U.S. same-store sales growth at 0.1 was better. Actually, international growth for Domino's Pizza, but hey, they're still staying above par here on same-store sales growth.
What was the gap up? I don't remember.
Dennis, I know exactly. Hey, Mitch, why don't you pull up Pro here? This was all analyst. Both of these gaps, I believe, the one
was
in
that an
June.
upgrade?
I think so.
My gosh.
Yeah. Well,
really?
Dennis, I think you played the first upgrade here, like back in mid-June. I remember you talking about it and like, oh, it gapped up. You're like, oh, down 317. That's not bad. And then it kind of waffled and then came back and check for me, Mitch. Was it
I'll get you right
it
up
had
right
a
now.
big day on July 12th. It stuck on $40. Was that an analyst move that day? That's what I thought it was.
I think you might be right. I'm starting to think like, and I remember thinking, holy, is that overdone? So was it maybe an upgrade?
I
That's
think
crazy
twice.
that moved that much on an upgrade.
All right. So
I think you're right.
Recent upgrades. There was one on the 13th. And then what was the dates we're looking at right now, Joel? What do you got there?
Well, I know for sure the one in June. That bump. Let's see, what day was that gap up on? June 15th.
Yeah, that's Stiefel.
That's Stiefel. And then what about?
I think it's the 13th one.
Yeah, that's
the 13th one, right? That's what I thought too. That's North Coast Research. Upgrades to buy with a price target here of 430, and that got them going. After that,
because that is the day it was up. Or
you started seeing a lot of maintains.
No, it was the 12th. The gap up was the 12th. That was the extra one. So what was the day before that one? 10th. I don't know. Maybe it wasn't an upgrade. Anyways, regardless here, it had the big up move. It was a deal with Uber. Thank you, New York Giants.
Oh, thank you. Okay.
It was not. You're wrong, Joel. It was the deal with Uber. That is correct. That was
being able to order from Uber Eats, right? That was the deal there.
Yeah. Thank you very much. We're looking for an upgrade that didn't exist. So it was a deal with Uber. Anyways, let's talk the earnings here. So the earnings were okay. The stock got hit hard off the bat. They bought this right back. I guess, they're just still in buy the dip mode here. So they see a stock down $15 it was earlier in the session. 4 a.m. traders getting rocked on this one. Stocks come all the way back up here now. 385. We're actually green. So I guess quarter's okay.
I'm going to go with the old one number trick on this one, and I'm going to throw out the pre-market action, and I'm going to look at the low of that gap day, that crazy day, the Uber Eats day, and that low was 381.24. We're $4 above that. I think, and it's very hard for me to do when I see a gap in something like this, but I'd say, man, I would try and stay bullish, but then it takes out that 381.24 in the regular session with some kind of volume. Then you get into open air, like really open air on the downside. So let's keep an eye on that for today. That's my one number for Domino's Pizza.
Apple in the news, and it's making big moves, of course, asking suppliers to ship 85 million new iPhones in 2023 as they are trying to stay ahead of inventory so they don't run into inventory supply issues here for the new iPhone.
And that number is about the same as last year. So if you're just trying to look and fill out projections, it's not like they're asking for less or more. They're asking for about the same amount as last year. And this is what we've talked about on the Big Seven. I mean, a lot of, NVIDIA side, let's go, it's not say the Big Seven because NVIDIA has been, growing the bottom line here. The top line growth has not really been there for the Apples and the Microsofts. This move is all multiple expansion. The reason, these stocks is it went from 24, 25 times earnings to 30 times earnings. That's what, it's all multiple expansion, this recent move. There's a lot of balls to juggle. I want to see how they respond to, now the rebalance is over. That was weighing on the stocks for the last couple of days. Do they get this lift into it, which would be the classic lift, or are these things just too crowded now to the long side? And maybe there's going to be, that, little bit of a sell-off here, because we haven't had a serious sell-off in Apple or Microsoft in a very long time.
Getting a little sympathetic pop on this one, but we're still a long ways from Friday's high. Friday's high comes in just under 195, so there is room up to that area if the rally continues here in the market, but just doesn't feel like it. High close of the move too, all-time closing high right there, 195.10. So that's a long-term number. Major resistance right now for Apple, coming back on the downside, comfortably above Friday's low at 91.23. And I didn't mention the SPOOs got after the hit, the run up early in the week, at the hit at the end of the week. As things stand right now, you got 3 lows in the same area, Thursday, Friday, and then if Monday lows hold. So looks like you just had another shallow pullback if we can hold this 45.60 area.
Well, the other thing we haven't mentioned too, Joel, and we didn't mention this on the show because we never give the Dow any love. The Dow has been up. Did you know this stat? For 10 consecutive days.
Yeah.
The Dow has been up for 10 consecutive days. It was up by a fraction of a point on Friday, so it just barely got it. But the Dow has been up for 10 days in a row. It doesn't feel like it, but it's telling you, again, the Dow is a lot more value oriented because there's 30 stocks, but a lot of them are like cash. They're making money. They don't put stuff in there that loses money. So, obviously companies can turn around and start losing money, but when they're going in, that's one of the criterion. So it's more of a value index. Mm-hmm. Dow breaking out here. Like, is this turning into the value market? Is this where we're heading here? Or is this just a blip? I mean, all these to be determined here. Last couple of days, not great for ARKK, I'll tell you that much, but value is still holding up here. Well, Money Mitch, what are your thoughts here? Are we rotating into value, and does this trade continue?
No, I just think all boats are being lifted. That's what I think. I think what you saw last week was rotation to some of those value plays, but I think you'll quickly see, especially if we have some good reports this week. We know that the big boys are reporting this week, and if those could have good reports, yeah, I think the tech trade could be right back, and then the value names get forgotten again. So I think this is one of those that you're just seeing a bull market, a real bull market where it starts to lift not just the 7 stocks, but all stocks. And then when that happens, we got to be careful trying to short the beast that this market is right now, because we're seeing a wicked rotation. Even when tech sells off, what did you see? You saw financials higher. You saw utilities higher.
Yeah.
You saw healthcare higher. And if it's always just going to rotate, well, then we got to stay with that rotation, right? And just be nimble, understand that there's going to be pullbacks, and then staying with that rotation in the other game. Like Walmart.
This is a great point.
A perfect stop.
You're in the bull market when they sell the mega cap techs, but they don't go to cash, they go to other stocks.
Exactly.
And this is exactly right. It's like when they were selling tech last week, they were buying other things. And that's where the bulls are still in control here until we start seeing selling across the board. And I mean, that can happen. We're getting at Microsoft and Google. But even if on Tuesday, but even if they miss, they probably are just going to sell those stocks and buy other stocks. I don't know if they're going to turn around and just sell everything because Microsoft and Google miss. But I mean, that's really, tonight is quiet. We got Domino's Pizza today, and then tonight we got like NXPI, which could move the semis a little bit. Logitech's on there, Whirlpool's on there, but tonight's pretty quiet. Tomorrow is like Microsoft and Google and Texas Instruments and Spotify, and Snapchat always seems to move the market to a certain extent. Visa. I mean, and then Wednesday we get Meta, and Thursday Amazon and Intel and McDonald's. We got some names this week. There it is, Money Mitch. Beautiful calendar there. But you can see tomorrow night is really the real kickstart of earnings season because it's the first reports from the big guns.
Just to mention, I think a really important report for me is going to be that GE report. It's been going up all year. Will it finally break that trend? I mean, talk about a channel. This has been in channel station all year long. I mean, it's ridiculous of the run that it's been on. But hey, I'm not going to get in the way of this. I'll be waiting to see what reports come this week. A lot of action going to be coming, especially starting Tuesday through the rest of the week. We have a lot to go through. Of course, we got the Fed FOMC minutes meeting on Wednesday. Then we'll get also PCE. I mean, it's going to be a hell of a week. Just get ready, guys. All right, let's go to AMC here, as AMC is definitely ripping. You guys can say that here, as a whopping 60% surge in shares after the judge blocks a proposed settlement on the stock's conversion plan. And then you guys got Adam Aron, CEO, giving out an open letter trying to get AMC investors to kind of buy into this plan. And I don't know how he thinks people buy into this plan.
It's dilution. He wants to dilute the company's stock further. This thing's been so massively
He just
diluted.
wants to
I don't
pay
know why
his
they give this
debt.
guy a pass.
Yeah, he just wants to pay his debt and let everybody else pay it for him.
Yeah. In any regard, so Friday night this happened, and Ape got murdered, Joel.
I see.
They knocked this thing down to 90 cents, and then they slowly bought it back, and it went back to flat. So it went all the way down, actually lower than that. It got down to 75 cents from $1.80. So they were like basically saying it's over for the Ape story. Well, no, not so fast, because Aron's fighting it now. Adam Aron's fighting it now. And the stock come all the way back. So, I mean, to buy the dip in Ape, you literally doubled your money if you bought that dip or more, 85 cents to $1.70.
I got it 67 cents though.
Did it go 67 cents?
Yes, it did.
Oh, buy the dippers are killing it on the Ape. And the AMC ripped up over $8.
Oh, man.
Back here now. It got almost $9.
Was the play to short
now because they're worried that they are going to try to still push this through, even though the judge blocked it.
Was the play the short AMC long Ape?
It was on Friday night. If you were doing that, you did well with it. So, I mean, now it's come back and AMC's still up and, Ape. So either way, I guess, the people who own them both are kind of happy because one's up 35%, the other one's barely down now. But I cannot believe the rebound in that APE. So again, they're thinking that somehow Adam Aron's going to get this pushed through.
This one in the open letter, I think, is a good one. He stated, "I don't hold these views, but I am AMC's largest retail shareholder, and I have an economic interest in more than 8.3 million of AMC shares and Ape units." So he's like, "Oh, I'm the biggest exposed to this dilution." That's what he pretty much wrote in the open letter.
As he sells stock on a daily basis.
Well, that's what I don't like is he sold a lot of stock up there, and we know that, and he was saying, well, I diversify, I'm getting close to retirement. I mean, he made a lot of money off the Apes. So, Adam Aron is what it is, but, he was definitely, saying he's a victim or anything like this. He's one that made a lot of money off of the Apes.
Wow, this AMC, I saw this news and I'm like, wow, I wonder what kind of pop it's going to get. But just, if you're trading this kind of stuff after hours or you're involved in it, I mean, look at this daily high that you had at 850. I'm just looking March. You had a high at 850 and then that was in February. Then you completely unraveled there. So that, unfortunately, that is not a good level now because we're $2.50 away from it. I didn't like to see this saying where, I think it's holding $6 off the open is pretty important.
It's hard to trade technically, though, because now you're getting headlines. Now they're going to try to push this through. If this conversion goes through, it's massive dilution. It's not good for AMC. It's good for Ape. But if this conversion does happen, then obviously, you're diluting your stock shares further. So it was, that's why they rallied this thing, AMC 100% Friday night. So finally, this deal's killed and we don't have to worry about the dilution. But we know what's happened, obviously, is, Adam Aron spotted here over the weekend. And now we're trying to, see, and it's going to be headline driven going forward. So.
And before I left, I remember talking about, we got to start co-locating with the courts. I mean, it's been court decisions Of course, we knew about the Activision and Microsoft, and then this, and then there was something else that moved huge off a court decision too. So, man, keep your eye on on the legal system. Really having some big impacts. And Ape, you're getting your money back on this one if you bought the dip. It's unchanged. So let's see if Ape can stay green, and let's see if AMC has can hold $6 in here, up $1.60 on huge volume.
All right, we'll see what's going on, but I'm wondering if Meta will continue to decline now that we have the surprising turn of events. Twitter going to rebranding to X.
What is this? I saw the X in the
X.
corner. So I logged into Twitter. It was this morning, and it was the first time I noticed it. I'm like, what is this X in the corner? I'm like, what the hell is this? It's weird. So anyway, so they're rebranding. So they killed the bird. So Joel, this is good news for us.
It's great news.
We have a monopoly. Look at our bird. It was always kind of close to
That's
the Twitter
our bird.
Ours would look better though because we had the worm coming out of it here. So, anyways, there you go. So we got full. It's our bird now, fully. Thank you,
cannot
Elon
compete
Musk.
with us.
We are the only ones with the cool blue bird now.
He didn't want to
bird's
compete
the
with
word,
us.
Oh, I
man.
like it. I like the news.
Bird's the word. Don't you guys know that, man? Come on.
All
right,
not for Twitter anymore.
Now, will this affect how Meta has been trading? Because Meta, of course, got that rip. It went above 300. Now you're starting to see it really turn back around. Can Meta continue lifting off of the thread news? I don't know if it can get back to that 300. That was a pretty tough
One thing to
crack
consider
there.
was part of the rebalance as well. It was a smaller part of it, but it was
Yes.
there. It was weak on Thursday and Friday. You can see the two candles. I don't think it's coincidental that it was getting sold in that, QQQ rebalance. That trade is over now. So you could see, and I think you are seeing a little bit of that relief pop this morning. I'm going to be back with you guys in 5 minutes here. I got more stuff going on.
Okay. All right, good. Let's see. We'll look at the technicals in this one, and I'll just stick with the. I'm sorry.
What do you think here, Joel?
I love with these kind of setups because you have both. I mean, you have great levels to look at. Let's say 319 down to 291, so that's 19 and 9, right? 32. So you take half of that the move. Let's just call it 15, $16. There's 305, 306 area, right in the high, right in yesterday's high. So what these stocks have to prove, and that's right there. That's right at Friday's high at 305.46. To me, the move would be how much are you going to get back to this three? Can you even get to 306, establish a bid, and keep on going? Or are people like, man, I missed my opportunity to sell this over 300. 300 is my target now. So let's see. I mean, it's been a magical run on the monthlies. It's been a little bit of hit on the dailies. You're getting a little bit of a relief pop, but boy, oh boy. I mean, you got a ways to go to get back half of the move. Old time high, 318.68. But keep up. I'll make that 305.5, 306. I'll make that a 4-star today. I know it's $10 away, but you know how much Meta can move. Mitch, what are you seeing on Meta?
Yeah, I'm with you on that. I like the 50% retracement outlook. And like I said, I think 300 is going to be a little bit of resistance. Let's see if we can just quickly get back over that, right? If you're right back over into 305, closing up there today, yeah, I wouldn't be fighting Meta. Let's just say that, I think we got to be really careful with these types of stocks that we get quickly bearish because it's just so extended, right? Remember, these are the strongest stocks like Meta and NVIDIA. You got to be careful when you're shorting the strongest stocks. At least I would personally put a little warning out there because I know I'm one of those brave souls out there. But
don't do it.
I'll tell you right now, you have to be as nimble and quick on that stop as possible because if not, you could get wiped out. And I think that we got to be careful with stocks like this.
So when do they? I'm trying to look to see when they
earnings.
Earnings.
Yeah, it's very important. So we get Metas in 2 days on Wednesday after the close. So that
would make me a little bit leaning more to the sell side than like okay, we're just rebound back to all time highs because I mean, this thing has had one heck of a run. I mean, and a lot of great quarters, put
Hmm.
back together. So the fact that it's backed off from the high, I'd be like, man, whew, maybe I'll lighten up a little bit. I mean, this thing was started the year out at boom 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 under what? Well, it ended the year at 120.34. You're up here trading near $300. I don't know. I don't have any of it, but man, I
Yeah.
I wouldn't be mind taking some off the table ahead of the report. It's just been a big run. So we'll see. And of course, with this, if looking at the close on Friday, I'd use that as an important level too. Anybody that tried to, buy the dip on the rebalance print, marked at 394.26. Maybe they're holding on for some more. You take that out, and Friday's low down at 291.20.
All right, let's move on to notable analyst ratings today. Let's go to RBC's capital downgrade on Twilio to underperform and lowering the price target to $50. This has been one that we've been kind of paying closely attention to. I know Kathy Woods was definitely like, yeah, I'm all about Twilio. It's down here right back to 60.55. What do you see on the charts, Joe?
Man, some people are getting a little break here that had sold this thing earlier. When I see 2, 3 lows in the same area, it catches my attention. Those lows come in at $59. I haven't even seen 60 yet in the pre-market, so I would just keep an eye on this 58, 59 area, see if it catches a bid there. If not, you look at minor resistance at the close at 62.26. So I don't know. I mean, it kind of just the way this thing, the big run up. I don't know. People behind the dip. Perhaps
Yeah.
they'll use this downgrade by RBC to buy the dip.
Yeah, I think when this company needs some AI mentions, let's just say that. I haven't heard too much from Twilio about AI, and I wouldn't be surprised if they eventually do come out with something on that. But keep an eye out for that. Let's go to the next analyst rating here. Let's go to Piper Sandler's downgrade on American Express to underweight and lowering price target to 149. AXP definitely not
Man.
looking the best after the report and starting to turn around from that 180s. Looks like there's some pretty big resistance right above there.
You got the resistance, but we're traded down. I don't know why you got this little bump in the final bump in June, had the nice run up, but I still think I look at this 165 and a half area as potential support. You haven't hit it there in the pre-market, so I'll use that as support and a continuation. It's been an upward trend, but this has kind of been range bound. Coming back on the upside here. Oh, you're also opening right. I mean, if bulls want to make a stand right away, you're opening at Friday's low, 167.42. I don't think that's going to happen. I think you get a little selling pressure, but use the close as a mark here, 170.22, to see if the street's going to be following this downgrade. But really choppy price action. If you're looking at it at trading range stock, this 180 has been resistance going back all the way to March and hasn't really fully participated in the broad markets rally.
All right, moving to Bard's upgrade on Netflix. Netflix to outperform and raising the price target to 500. I like this one because, of course, Netflix getting really hit hard on their earnings, and this is definitely going against the price action, at least the recent price action. But you're getting it at a discount now, right? You're back down to that 425 area. What do you think, Joe?
I think you're working on a red candle for the month so far after two really big, two big up months and also really been rallying since the middle of 2022. So a couple things I'd be looking at that close, that month end close from June is major resistance at 440.49. Might not well today. That's in the area of yesterday's high, 438.24. But it just looks like a red candle here on the monthly and below this 423.15. Like, where do you go? At least based on the monthly chart. So better hold there after this upgrade. They hit it hard on earnings. I saw that. They had the gap down day. So hold in here another day. Maybe that's the low for the month, but right now it still looks like some selling pressure on Netflix.
All right, and then we'll go to Stifel's upgrade on Lam Research to buy and raising price target to 725.
Oh man, these are tough, tough, tough. But it's getting a pop. Same thing. I could do the old retracement trick on this one too. Basically 664 down to just call it 620. The 630 area, it's trading above it. My focus, man, I don't have a number for you, man. This thing is a $600 stock. I'll go your 3-day close. It's 640.11 is potential resistance, Mitch. What do you got in this higher price stock?
You just got to watch what happens in the chip restrictions, right? These haven't affected these companies as much, and they've been lifting as tech lifts. But I would still watch, be careful, the semiconductor equipment stocks for more chip restrictions. As of course, there's more battle for technology. China, USA. We saw what happens with the Netherlands. That's one thing that I'd keep an eye out for. And the thing is, these are so expensive. When they get hit on news like that, it's like a big pullback. So I'd be a little bit careful on these. I like more the semiconductors than the equipment behind them because I feel like those could have more restrictions. All right, let's go ahead. Let's get out of that conversation. We can talk about the markets all day, but I heard in the chat, I was like, hold on. Is someone asking for Market Structure Mondays? Of course we got Market Structure Monday. Tim Quast is ready. The question is, are you? Tim, what's going on? How we doing? Founder and CEO of Market Structure Edge at the good old Steamboat. How we doing today, Tim?
Good to see you guys. I'm worn out. Actually,
you party too hard. Tell the truth, Tim.
No, we hiked too hard. Well, not too hard, but
I love it.
There's this great hike out here called the Zirkel Circle. So it's part of the Zirkel Wilderness, and it looks like the Swiss Alps there.
Yes.
And there's, I picked up some snow, hands full of snow yesterday. Still snow up there in the high country. And but I'm getting old, Mitch, so it took a toll.
It definitely takes a toll. I mean, that's not a 1 mile hike there, guys. So
it is not. We did 9 miles, but you could do 11 or 12. Yeah,
Okay.
and it's every step you take is up. There is no down. So
we're not talking
exactly
both ways. But that's right.
Both ways. Yeah.
All right, Tim. So we broke out above the expiration high, right? And that's always great for a continuation of a trend. And then we had a Russell rebalance, kind of knocked the big boys off last week. But bullish, bearish, none-ish. What's the data saying, and what context should we look at it in?
Yeah, I think it's the central question, isn't it, Joel? I don't think of the market in terms of being bullish or bearish. I think about it, are there opportunities short term or long term? And I think it's important to separate the economy from the market. That I wish they were connected. They should be. One should be a barometer for the other, but that's simply not the way that the market works anymore. And so, if you look at the FactSet puts out this data around each earnings period that I find to be pretty interesting. You could track it almost every week. It's called Earnings Insight. You can look it up. And so here's the economic view of the data. Then we'll talk briefly about the market. Economically, year over year, corporate earnings are down 9% so far as we proceed through the earnings cycle. Now we're only 20% into it. There are 1,500 companies that report results this week. But earnings down 9%, revenues down about 30 basis points. Both of those would be the worst since Q3 2020. Now, again, what does that tell you? Well, it certainly tells you margins are hampered Companies are not making as much money as they did, yet stocks are trading, certainly in many instances, at 52-week highs, particularly large caps. So is that justified? Well, of course not. But it's a great dovetail into how the market works. And I think it's very important, traders and investors, you got to understand how the market works today. The market treats stocks as products, not as stories most of the time. The data are simply overwhelming. It's just that most people don't pay attention to it. 85 to, I'm quoting Mark Rowan, CEO of Apollo Group, 85 to 93% of stock pickers don't beat the benchmark. So you have to realize you have a 1 in 10 chance of being better than the S&P 500. It's not how the market works because money allocates to benchmarks. There has been a surge. There is no question. We can see it in the patterns of the data, particularly from active money, stock pickers. If stock pickers have come rushing into the market about the time that the NASDAQ 100's reweighting. I think that passives are overweight equities. I can look at it from multiple standpoints and say the market could be at an inflection point. But is it bullish or bearish? No, I don't really think about it that way. There are always opportunities, but there is a clear disconnect between the market and what is occurring in the economy. There's no question.
Yeah, and I completely agree with you. And I think, I think JC Pretzel always made this point here too. Most of the time stocks are just trading on, technicals or this or that. And, there is disconnect. He says there's never a connection. There is a connection at times, but I will agree with you 100% here that, this market doesn't really care that much about the economy right now. This market is just thinking, oh, stocks are going up, I'm buying.
Mm-hmm.
So that's why we jump into, your, obviously your system here, Tim, and we look, and we like to look at the market structure. We like to look at, what supply and demand saying here, because it gives us a glimpse for this week. That's why we like our Monday segment with Tim Quast, because it gives us a glimpse into what, supply and demand is looking like. So can we break into that?
Yeah, absolutely.
Yeah, definitely. And I think one of the biggest things also, of course, is as you pull it up, Tim, is that at the end of the day, this is giving us an edge off of what? Off of more of a data outlook than our just thinking, right? Because one of the things that we can easily do in the market is just overthink the market, right? Well, this can make things a lot easier for you if you're that type of person or investor. Let's take a look here. Let's get into market structure edge. Let's see what the data is pointing down.
And to put context around,
can you do me a favor, Tim? Just because I can't see it for some reason, can you reshare that? Oh, there it goes. It woke up. I woke up.
Little slow, like me. Just a little bit slow.
I'm slow I'm slow too today. Monday cobwebs.
Oh, yeah. It feels like late July. So for context, what is market structure? It's the mechanics, the rules, and rules that govern how the U.S., since U.S. stock market centric, how it works. Bunch of rules govern how trades match, how stocks get priced and quoted. That's all regulated. So beautiful thing about that is we can build mathematical models that look at it. And it's not technical or fundamental. Technical inputs and fundamental inputs are a part of demand and supply. So, this is what I mean. Demand right at 5 is low volatility. Stocks that spend a lot of time at 5 are low volatility stocks like, Philip Morris, Colgate-Palmolive, Southern Company, just picking stuff. When demand is at 5 and supply falls, there is a probability of producing returns. And that applies to whether you're trading low volatility, meaning you're hitting singles, not home runs, just want to get on base, take a little profit, or momentum. Momentum has really big divergences. So this is what we look for all across the market. Is there momentum? Is there low volatility? What is occurring in the broad market? Broad market is much hotter right now than the low volatility portfolio, which is at 5.6 if you took an average at certain points, but right now 5. So 6.6 that's the S&P 500. Whoops, I got to reload that. Sorry about that. So if you look at broad market sentiment, I think this is very telling. If you back up and you look at I'm going to do this for the sake of illustrating a point. So if you look at a 3-year view, where did the market do really well? Well, it did really well in here, back here from November 2018 all the way to around around September 2021. This is a great stretch. What was demand like? There are no drops below the green line at all. Very strong demand, and then come down and look at supply. Supply was very consistently below the trend line. When those conditions exist, stocks do well. When stocks begin to spend more time below that green line and supply rises above trend, they don't do well. So what is it now? Well, we've had the same conditions as back here. We had very strong demand, nothing below the green line, and insufficient supply. That's what causes stocks to rise. If those conditions break down, and they tend to break down once the demand rises above the red line, then we have trouble. I can't tell you right now what's going to happen next. It will all depend on the supply-demand equation. That's why I'm neither bullish nor bearish. I could look at those data and say, well, could go on. I could also say, well, it could fall apart at any moment. So what do you do? Right?
Yeah. What do you do? What do we do?
Yeah.
Right.
Tell me what to do.
That's what we all want to know. We just want a simple answer that says, can I do something that will consistently produce returns? Well, I'll tell you, what I do. And so I bought 2 positions in the momentum portfolio on Thursday because there were over 20 components in it. Right at the end of the day, two members of that portfolio, Twilio and Trade Desk, were down almost all of their volatility, how much they move every day. Well, I can look at the supply-demand balance and say, that's a pretty good bet. On Friday, I was stopped out of both, but I lifted my stops well above my entry point. So I was assured of making money. I didn't care if I hit my limit or my stop, but it was telling that they stopped out. So I made about 80 basis points on those. That's fine. I'm very happy with that. And that's really what you do. If we look at this Benzinga July 24 portfolio, look at this. Demand very steady, supply falling. That kind of condition will produce a return most of the time, statistically 72% of the time, no matter what your entry point is. In 1 to 3 days, you can produce a return of about 1%. So that to me is what you can do in any market. If I were to pick one of these, I'll go up here and do it. I would say, how about LyondellBasell? Big lithium company. I really don't care what they do. I care because what they do is known by somebody else whose opinions and actions are an input into demand. So I don't have to know what someone else knows. All I have to know is, do people agree? Well, generally, people agree that LyondellBasell is a low volatility, steady demand stock with falling supply. What happens in any market, pick your thing, when there's steady demand and falling supply? Prices rise, right? That's always what happens. Now, it's not perfect, but that's how to look at it. And to me, that's what you do. That's how you can trade just about any market.
Yeah, and I think one thing that stands out to me, Tim, is that we've been able to keep a mix of volatility and those momentum names. What does that tell us, Tim?
It tells us that the market doesn't have full agreement on the conditions in the market. If those two things are very similar, look, and the numbers have fallen. If we went back to mid-May, right at options expirations, there was an explosion of momentum momentum portfolio components, jumped up to like 35. Well, that's a lot. And sure enough, the market ran until that number dropped. Then low volatility jumped up to 35. And what happened to the Dow Jones Industrial Average? It hit 52-week highs because everybody wanted low volatility. And when the two are very similar, it tells you there is a bifurcation of opinion. Under the skin of the market, people are wondering whether this is sustainable. And yet there's enough enthusiasm to impute a bit of momentum to the market. It's kind of a clash. And I don't know which side wins out. I don't really care. I'm just going to keep trading divergences.
Tim, what's been working for me is looking at your market structure edge, just that first momentum one. I like seeing those momentum stocks. I think there was 8 last week. There was 4 the previous week. It looked like there was 11 in there. And I always like to see them because they change.
Yes,
I like to see what's in there. So if you can dig back into there, gives you a feel for where people are looking right now. So, I really like that, and here you go. There's 11 of them there. AMD, that's a new one in there. That wasn't in the last week.
It is.
Yeah. AMD at the top. Is this now just alphabetically, or is this priced because, is this list? That's not alphabetical.
No, it will be ranked by first by demand, then
Okay.
by supply.
Okay.
So notice the AMD is an 8. I'll zoom that in a little bit, and has 49.2% supply. That's pretty high. It means almost half of the trading volume, the volume. This is not short interest, it is volume. It's the modified uptick data set. So 49, almost half of AMD's daily volume of 77 million shares is borrowed, right? So it's good to know that. That's still okay. I don't worry about that particularly. Then notice the first 10 is Baker Hughes Energy, and it will be ranked by the lowest supply. Then that will move up to the highest, which is Square. There are a lot of financials in here. Notice that? Whole stack of financials at the top end of it, which is weird, right? That to me that's a little, should that be true? Well, not fundamentally, it shouldn't, but it's not fundamentally driven. This isn't being driven by fundamentals per se, but notice the active money is a big buyer of these financials. That's interesting to me. Passive money's buying healthcare. There is some passive in larger financials. Notice that 74 billion in market cap is Blackstone. Yeah, Blackstone. So passive money buys size. Active money will say, "Oh, well, we like these stocks." Well, they may be wrong. I'd rather follow passive money than active money, frankly. But there's your set, Dennis.
Yeah. Well, what's interesting too is, like you were saying, there's actually a number of different industry groups covered in there. Sometimes you see, and it's all tech or it's all banks, but there was, a few tech stocks. There was a consumer staple, I believe, was in there. I forget now the list, but you bring it back up. It seems to be diversified. That game that Jim Cramer plays, am I diversified? Tim, that was a diversified portfolio right there, I think.
It is. It is. And if you bought it, mathematically, this is true. I've got I call him Young Nate, the
scroll over to see
mathematician.
the symbols again.
Yeah. So we crunch data all the time. We found that if you bought just the midpoint price of anything in the momentum portfolio, you would in 1 to 3 days. We calculate 1 day, 2 day, 3 days. What's the probability of a 1.5% return above your entry price? Well, it's a 72% likelihood. Now, again, that means 28% of the time you won't. But I would take those odds any day. That is massively better than Las Vegas, right?
Well, I'll tell you one thing, guys. I see a lot of people asking about the data in the chat. Well, you can, guys, just go ahead and take a look. Get your 30-day free trial, right? No credit card even needed. So if you haven't gotten your free trial, what are you guys waiting for? Check it out. Market Structure Edge, link in the chat, and of course in the description. Always good to have you, Tim Quast.
Always good to be here, guys.
Thanks,
Thank
Tim.
you very much. Good to see you. Have a great week.
Have a good one, Tim. All right, let's get back to the market. How we looking, Joel?
We're quiet pre-market session here. Just trading off the high, up 6.5, up 6.5 handles. So comfortably above the close here. So bulls still in control here. I'm looking at your mega cap tack off the rebalance on Friday. They're all showing green except for Tesla. What's going on with Tesla? I believe we got a downgrade. Yeah.
Tesla with a downgrade? I didn't even catch this one. What we got there?
We're going to grab it right now. We were pitching that to you, but Tesla downgraded by it's
UBS
there.
to neutral and raising price target to 270.
I love that. You
love those downgrades, eh? That raise the price targets. Like, is it a real downgrade,
that. You know what I mean?
or is it just, yeah?
You know what this is to me? This is just a late to the boat analyst. He sees the downturn. He was already ready to put out an analyst note about raising the target, but now he sees it getting hit. He's like, I'll downgrade it and raise the target, because
it's just confusing when they do that, downgrading but raising the price target. It's not that they're not obviously very well. I guess he went to neutral, so he's just trying to he's saying take the money and run. It was an ugly couple of days for Tesla. We know they had earnings that impacted it. Maybe the QQQ rebalance may have had a little bit of impact on Friday's action, but it was Netflix and Tesla. We can probably cover both of these together because they were two of the first big guns that reported, not like the Microsofts and Googles and Amazons that we're going to get this week, but these are big companies. And both had okay earnings, but simply just ran too far into the reports. So it was the classic example of buy ahead and sell afterwards. And Netflix, let's talk this one here for a second, because it's upgraded here today. and it's still trading red, Joel.
Yeah.
That's a rare one. You don't see that very often. Upgraded to buy at Baird, was trading higher, a lot higher earlier on today, and now it has completely given back the pre-market gains and has turned red. So pressure here for Netflix still.
Yeah, looking at the Netflix chart, you never want to see that. You want to see it regain that closing price at 427.5 and work its way back into Friday's range. And Friday's high is way up at 38.24. And then we talked about this one earlier, the importance of holding that current low at 423.16. Tesla getting a hit here too, opening up near Friday's low. So when I see Friday's low coming in right there, bulls immediately need to step up here right at the 255.80. Not much under that. I'm going to look a little bit longer term, and man, you got great. I know it's a ways away, but looks like as long as you can stay above 240 here,
Yeah.
bulls still in control
I'll
here.
give them that
with
too.
Tesla.
I think this dip could get bought. I think bulls are in control. Do you strike at 255 or do you get it at 250 today? Hard to say. Again, if we're playing the QQQ rebalance, Tesla was a little bit maybe under pressure last couple of days. That pressure could be relieved. Downgrade still keeping it down here today, but you never know. There could be. We're seeing a relief pop in Nvidia, Microsoft, a little bit in Amazon here this morning. So could it roll over to Tesla? Could. I'm kind of interested in buying the dip here.
All right. What about the UPS strike? As roughly 340,000 employees prepare to go on strike nationwide. And will they come after FedEx? Will they come after UPS today? Watch out.
Well, we've got ODFL too, which is trading down 22 points here. I didn't even catch the headline. I was trying actually to look for it, and it's a hidden one there. So you've got, and then if you want to go to XPO, it's trading down 5% as well here today. So both of those stocks getting hit. And then you got UPS trading down. And then you got FedEx trading down. It's kind of a little bit of a mess in the shipping land here this morning.
Yeah, coming after trucking for sure.
With this UPS so far, if you've been playing, the strike and the negative impact, it really hasn't been working. This thing has been rallying, trading down to $1.35 today. Looking at just looking at the dailies here. Now you're trading below Friday's low, so I would look at that as resistance here, getting back in between Friday's low and the close. And then coming back on the downside, you just have, daily lows that are about $1 apart. I just go for the look. If the bears really want to put the herd into this, then I'd maybe take a look out for 182.60. That spots a pair of lows from last Monday and Tuesday.
Also, just to kind of mention, I know it's not specifically with this, but keep your eyes out, of course, on the UAW. We'll see if they strike against Detroit's big three automakers, and that could happen at any moment. I'm keeping an eye on Ford and GM. As Ford and GM start to come down here, I would be careful with these companies on any strike news.
I think that leads into the overall, inflation picture, right? And something the Fed has to be, aware of that, wages are the stickiest part of inflation here. And these strikes and potential demand for higher wages is not going to be great for the inflation outlook. So we'll see how these strikes turn out.
The chart don't look great there either. So as much as we can talk bullish on this market, there is a few stocks that are starting to look a little bit weaker. I don't like the GM chart from Friday. I think that Ford Lightning price cut spooked people. I think everybody thought the Lightning's going to kill it, and they were buying Ford up ahead of the Lightning. And even and now that they're cutting the prices, they're like, oh man, this is supposed to be their electric vehicle. This is the one that everybody's going to want to own. And when they're cutting the price on it this early after the release, you're like, holy, this is not good news. So I think that's why Ford, I think that's obviously why I got hit last week, but I think it remains under pressure here. So I'm going to say guilty until proven innocent on both Ford and GM. I'm still long half my GM in my long-term account. I sold half of it, but I'm not liking that candle from Friday either. Almost feel like selling up if it is to rally up a little bit. I almost feel like dumping it out.
We'll see what happens there on GM and Ford. Let's go to the last one I wanted to talk about, which is China's economy taking spotlight, of course, as the company ramps up measurements ahead of a key meeting, political meeting this week. Of course, they've given recent uplifts to EV credits, things like that has helped. You guys can see that in XPEV, LI. Those have really kind of started to get going. NIO, the China EVs. But I think now we really need to start watching to see if some of these tech companies can make a move. Baba definitely on my radar here. The 92 just standing out to me, maybe 91 right below it. This looks to me like it could maybe get a run into earnings. They report earnings Monday, August 7th. Of course, we'll see what happens here on Baba.
Yeah, I think as a trade, and again, there's always geopolitical risk,
right?
and we never know. That's the boogeyman in the room, and you never know when that geopolitical risk might come to the the forefront here. But I mean, I don't mind the pullback on these stocks. Baidu is kind of going. Now you're checked back to support here again at 140. I mean, your train is at the station on Baba and Baidu. So if you want to strike from a long trade, you kind of know where your out is. I mean, if it starts to take out 90 Baba, I would say I'd stop myself out on that. But if you want to try to go in this for a pre-earnings run, which often does, when does Baba report, Mitch? Do you know when they report?
Monday. I just stated it. Monday.
One week from today.
Yeah.
I love being in stocks 4 or 5 days before the report trading day. So that's when the pre-earnings run. If you want to just identify the pre-earnings run, it's usually for me starts about 5 days before the company report, 5 trading days. So you would be today would be the start of the pre-earnings run for Alibaba, which hasn't happened yet. But I don't mind the setup here. Again, geopolitical risk is always there, though.
Yeah, I mean, when is like we're gonna get a definitive, like China, is behind, the economy and helping companies. It seems like we get these like green lights and then they never end up materializing. For Baba, it's had a nice rally, nice, quiet couple days on Thursday and Friday. Good support, pair of lows in the lower 91 handle if you want to if you get a little retreat, and then coming on the upside, actually you have matching ranges almost. Pair of highs at 93.20 and pair of lows at 91.40. So there's some parameters for Alibaba. I'm gonna wrap things up here on my part. S&P's up 8.25, 45.73. A little bit of a weak close on Friday, but they're rebounding. For me, my key will be, the big tech, the Apple, Microsoft, Google, Amazon, Nvidia. They're showing green. If they, show green, that first 15-minute bracket, hold their open, rally back up. If they, they're still big part of the index as they start to roll over. Maybe we'll get a look at that. Right now, it's a pair of lows at the 45.60 area. So
and the textbook trade worked. I just want to recap it here again for those who joined late. The textbook trade is working here. The textbook trade was to buy the close on these things Friday because there was pressure on the QQQ rebalance. That happened at the close. People asking, they're getting, because it was confusing because some people think it's happening to close today. It's not. It's at the open today. So it would have been at the close on Friday. And that's why you had the big sell imbalance in NVIDIA, and it was really knocking the price down at the close. That is completely rebounded. It's up $4. And people say, well, what's the news? I think there's no news here. I think it's mainly just that rebalance trade going the other way here. So textbook would say, actually, it is supposed to show strength today. That is exactly what we are seeing in the pre-market in NVIDIA and Microsoft.
Okay.
All right, that's going to do it for us. Like always, you guys can keep up with Joel Elconin on Pre-Market Prep Plus, and of course, the close-in print. And Dennis Dick.
I got a phone call, so I'm going to hop there too.
Have a good one, Dennis. Dennis is out of here. We're going to bring you guys over to live trading. That's coming up next. Don't go anywhere. And of course, if you haven't joined the book club already, go ahead and join the book club. We will be meeting again this Tuesday, of course, every Tuesday night at 7:30. It's the only exclusive club here on our YouTube. So if you guys want to go ahead and check out the book club, you have to hit that link and join up. Like always, it's free of charge. It's one way that I am able to give back to you guys, our traders out there, to keep upping their skill to the next level. Now to get you guys over to live trading, Lord Ryan and I are ready to get after it. I don't know about you guys, but I'm ready. I had a great weekend. As you guys can see, a little trophy back there. Find out why I got a trophy and find out why I want to get another trophy in the trading game today as I get after it, of course, with the small account challenge. And remember how I think it was Tim Quast has said 1 out of 10 traders are able to beat the benchmark. Right now in Moomoo, I'm up 25% on the account. I think I might be beating the benchmark. Come find out on live trading. I'll see you guys over. Hit the like. Let's keep it going right here on Benzinga. Of course, the #1 place to keep growing your trading skills and leveling the playing field, of course. We'll see you guys over. Let's get after it.